Hey everyone, Mark here at TapeTally.com for your Week 21 recap. This week we saw the markets bounce back from oversold conditions. We had quite a horrendous week last week with markets down, I think, over 5% or something like that. Um, so we saw overall markets jump about 2% here. Dow Jones did not get quite to a percent here. Gold was down a bit, oil was down more. Volatility was down, obviously, with the up market, and the Canadian markets were up almost 2%. This week, I'm going to maintain my ratings. Not much has changed. We did alleviate some of the oversold conditions, but as I'll explain later, this basically looks like a bear flag pattern in a correcting market. So let's jump right into it here. We'll continue with the weekly chart here to kind of get a longer term view of the market, and we're still stuck in this overall neutral sort of bull market right now. We're sort of in the middle of the channel as we talked about previously, and if we go through the markets, we'll see that this week we did have this bounce, but it basically looks like a bounce in a correcting market. We jump through these here. Gold, you can see we talked about that breaking. This is probably the chart that best illustrates trendline break. So we had this break here, and we're just consolidating here. I would not. It would not be unexpected for it to bounce up here, but I'm thinking that it continues lower in the months to come. Oil. It's kind of dead money right now. It just seems like it's basically been dead since the oil crash in 2009, or sorry, in 2008. It's been dead since 2009. Let's take a look at volatility. Hard to look at anything on the weekly time frame. Canadian market's still bearish, in my opinion. So let's take a look at the daily charts. Let's go back to the SPY, and I mean, if we look at this, we blow this up a bit. It's a correcting market, and this is basically a textbook. If you look at any technical analysis book, you'll see that alright, let's take this off. You basically see this everywhere in a correcting market, and we see a bounce back from oversold conditions, and it's oops. Okay, I'm just trying to not extend it. There we go. So this is a textbook bear flag pattern. We see a correction in prices on higher volume, as we saw here, and then we see a bounce back on lower volume. So that's basically textbook. Now, I don't want to go either way here. It's sort of still a neutral market on the long term. Short term, we are in correction mode. So one thing that I guess I want to point out is that this bounce is not really that significant, and we can't let these corrections in this chop that we've seen, basically since the middle of March, we can't let that affect not only our emotional but our financial capital. Now, I've made this mistake, a number of times where, you get on a good roll. So let's say, for example, here you started trading January 1st of this year. This is an up market. Your strategies are working. Everything's looking great. We hit mid-March, and then all of a sudden we hit this chop zone, right? And we're just going up and down. Breakouts are starting to fail, and they're starting to really jump through our stop loss points and everything, and then we get this huge correction. So not only do we lose the gains that we made here, not only do we give up all those gains, but we start to lose capital, and we start to become frustrated with the market. And at that point, either you go belly up with your account, or you just become so frustrated with the markets that you just give up. So the way that I alleviated that was I just got out of the market. Basically, I just preserved my capital, both my emotional capital, which I think is a lot more important. I just stand on the sidelines and wait. That's the best thing that I could advise anybody to do in this sort of markets. It's basically, I think the risk is to the downside here, but I mean, we could see more of a rally here. I really think that traders are still quite bullish, and I think I think they're positioned for a squeeze upwards here more than they are for the downward move. So as I say many times, the market does whatever it can to frustrate the most amount of people. So I think going down here would frustrate more people than if it went up. So one thing I wanted to do is take a look at all the stocks that moved on high volume on Friday and met a liquidity requirement that I have basically. So let's just pull these out maybe a year or so. These charts make them a little bit okay. Yeah, it's about a year. So if we look at, stocks that moved on Friday on high volume, and we'll take a look at their chart patterns and see, if we can get a good feel for what the market is, if it's neutral or bearish or we're heading up for a bull move here. These stocks will move typically beforehand. So if you take a look at this chart here, now you got to ask yourself, now what is this? Is this bearish, or is this bullish, or what's going on here? So one way we can kind of define the structure analysis is we can say, this has broken a trend line here, but we can tell that this trend line, if you're a shorter term trader, you're looking at this trend line, it broke it a long time ago here. I mean, it's basically that simple. The market tells you through its prices what's happening. So I would say that this chart is basically, it's bearish for the time being, obviously. When something gets this oversold here, we could see a bounce and filling this gap up to here. But if we're getting back up to the $44 range, I would look for a short signal on this stock because it is going down. Complete genomics. This is a bottom fishing chart. It moved on the Thursday, and it's breaking a downward trend line here, although it's not from what I like to see from from higher lows. But nonetheless, it's not really a high probability trade setup, so I would call that a neutral one. This one is basically neutral. It's just in the chop zone here. So it did have high volume on Friday, but this could be for a different reason. I don't really care, but what the reason is. So let's continue on here. This is obviously, you can tell this is bearish. So I mean, I can go through these charts and it takes me 1 or 2 seconds to decide whether the chart is good or bad. Now this chart right here, for example, I look at this chart, this may stall me for a second here because I look at, I like the higher lows, but what I don't like is that it has these 2 resistance levels, one right here, one right here. I would like to see it break out above that. So this may be one that I would keep on my watch list. So let's continue on here. ITW, neutral, bearish. It's just, we're still stuck in a sort of a neutral, trendless market here. So I mean, this one, it's starting to consolidate. Volatility is coming in, so we want to see the volatility pop out here. And even then, you got to look at, okay, so let's say on Tuesday when the market opens up again, it was to pop big and it goes over 41 bucks. It's not a bad chart. You've got sort of a pennant pattern forming here, right? So if you took this trade, it's really not bad, but you got to look at a few things. You got to think about, okay, if you're buying it at 41, probably sell it at the last low here, so that's, let's say, 38 bucks, let's say. So that's $3 of risk. You want at least 2 to 3 times that. So let's say you want the lower end. You want 2 times $3. So you want $6. You want $47. So if we pull this chart down a bit, $47 is way up here. So the risk reward is not there. Even if we get a good break out of this chart pattern, the risk reward is just not there. I would probably not take that trade unless I got in very early in the day and I saw that it was moving pre-market or something, and then I sort of took a little bit of a risk, let's say just under 40 bucks as it was starting to break through. Then maybe I might take it for a shorter term trade. Let's move on to the next one here. So we can see here, stuck in a chop. SMTC chop. This one is sort of getting away from its trend line. typically what happens is stocks will come back to their trend line. So this one, I mean, there's a number of trend lines you can draw on this, obviously, but this kind of longer term one here, I would expect this to correct. The time to get in on this would probably be, right, probably on this candle right here. Let me draw this one, probably here, but it wasn't really acting abnormally that day, so yeah, I would not take that setup. Continue on. This one's a bit extended. So I mean, as I continue on in these charts, there's just nothing really that catches my eye. No, just continue on. And I mean, very volatile, stuck in neutral ranges, bearish patterns, nothing really setting up nicely. So, I mean, this kind of gives you the whole story of the market. It's just kind of dead money right now, basically. And I mean, yes, I am trading. I am trading the VXX right now, and the GDXJ. You can follow that under the Performance tab on tapetally.com. Just sign up for free there. And I mean, I am trading it for a bounce here and things, but I'm really not that active in the market right now. And I'm basically sitting, in cash. I do have a trade on in the GDXJ, which I posted on Twitter. But for the time being, the probability is that we continue on in this range, or we have a deeper correction. That's sort of how it is right now. So if you're, used to basically buying stocks all the time, then this would be a good time to just sort of sit on your hands. That's it for this week. Thanks. Have a great week.